Hello, everyone. Welcome to the third episode of Funded Fridays. My name is Roz, and here I have...
My name is Zoe.
Yes. And we're going to go over some of the deals that we closed this week. So, take it away.
Let's start. So, Roz, what do you have this week? What did you close?
So, this week I actually closed a DSCR loan. It was a very nice loan. The guy's a developer. And what he does a lot of hard money construction loans to build the homes. And then he comes to me to refi them out because he has to get out of them. It's only for a year or 18 months. And this specific DSCR loan that I did for him, the loan amount was about 1.2. The value was about 1.7. The rent was perfect. It was like $11,000 a month. So it did DSCR. I believe it was like a 1.3. And the bank closed it within like 2.5 weeks. I got him a rate of 7.25 on a 30-year fixed mortgage. And he really, he liked it because he was paying almost like 10 to 12% on his hard money loans.
Oh, okay. And can you explain me what is a DSCR?
Well, DSCR is a debt service. They have to debt service, meaning that the rent has to cover the actual mortgage payment that he's going to be paying now.
And can it be like equal, the ratio, or?
It can, or it can also, right now the banks are doing, I believe up to 0.75, even below. But the rate's going to be a little higher, but they'll still fund the loan, even though it doesn't DSCR at the 1 or higher.
And how did you check the rent? It's based on the appraisal or based on a lease agreement?
Well, we did both. We did the appraisal and we did also the lease agreements that he provided, also showing the actual rent deposits into his account. And he gets good rent. So either way, if we use the appraisal or not, it would have DSCR'd because the rents are very high.
So they always require appraisal based on the rent?
Yeah, the appraisal will do like a 1007, which is what they'll do is like a rent schedule. They'll see what the actual rents are, and if his rents, they always take the lower of the two.
Okay, so, got it.
Even though we provided the actual rent receipts and rent deposits, they used those to qualify him.
Okay, sounds good.
Yeah. So tell me, Zoe, I think you had a big week this week. What did you close this week?
Yes, so I just closed a construction loan. It's a ground-up construction.
Wow.
And it's also was with a developer. He's very successful. He has like very nice resume. Mm-hmm. At least 5 properties that he did in the last 5 years. And this developer came to us from referral. And usually he worked with a very solid bank. But we give him a really nice terms. So he did. He was looking for purchasing plus ground up.
Okay.
So the purchase price was $1 million, and he was looking for $650 for renovation for construction. Okay. So we did for him like 85% of the purchase plus 100% of the construction. Okay. So loan amount coming up to 1.7.
So let me ask you something. So you did he purchased the house and you gave him construction money?
Yes.
So
he put 15% down that it's
and
perfect.
What are the qualifications to get that kind of loan? What do you need?
So we focus on the resume. For someone who does ground up, we're looking at least for 1 project in his resume. But this guy, he has 5. So that's the reason we can give him the 15% down, and 90% LTC, loan to cost.
Wow.
So we really give him a good conditions. Okay. And also FICO score should be 680 and above.
Okay. So the money that he gets for the construction, how does that work? Where does it go?
What do you mean?
Who holds the money?
Okay, so first of all, we give the money for the first transaction, the purchase.
Correct.
Yes, so 85%.
Right.
And then once he starts the construction, we start to release the money by phases. Oh, so once he finish 1 phases, we release the money, and then he paid the interest only for the drawing money.
Oh, okay, nice, very nice.
Yeah.
Wow.
And same, the rate was very good. Like he got 10 and a half.
10.5% rate.
10.5.
Wow.
Yes.
Interest only.
Interest only.
Wow.
Yes, but as I said, he paid the money for the construction only for the money he used.
Oh, so it's like a line of credit.
Yes,
So he's only paying on what he draws.
exactly.
And how's the draw process work?
So he has the budget and
Okay.
it's by phases.
Okay.
So when he finish, for example, with the demolition, he show a receipt or he send the pictures and then they release the money.
It's for the next phase.
Yes.
Okay. And then how long did it take you to close this loan from start to finish?
So with this lender that we work, very simple. Like this loan was ready to close in like 25 days.
Wow, 25
Yes.
days. That's perfect. That's good. Nice. It's good construction. Okay.
Yes. So this is about the construction, and also we do a fix and flip. Now we're really focusing on fix and flip and ground up. A lot of people coming back to business, and they're looking for a loans.
Okay.
And yes.
Okay.
What else do you have this week?
And another loan that I was a good loan. I don't know if anybody's heard about it. It's the bank statement loan seconds, and what that is, it's a second mortgage because a lot of people today they don't want to touch their first mortgage obviously
Yes,
because
of
they have
course.
a 3% rate, 4% rate. They don't want to refinance, and they need money. They need money to either debt consolidate, they need money for home improvements, to build an ADU. So what I did, which I have a lot of banks that are doing them now, is doing a loan, a second loan based on bank statement deposits. These are mostly for self-employed borrowers. So if you're self-employed and you don't show income on your tax returns, there is a way to get still money out of the house. And basically what they do is the bank looks at your bank deposits. They take the average of deposits that you deposit every month, and that's basically your income. So if you're depositing $20,000 a month into your bank deposit, they don't care about withdrawals. They care about what comes in, not what goes out. So that means your income is $20,000 a month.
And when you say deposit, can you explain like what type of deposit?
Yeah, deposits meaning like wire deposits into your account, Zelle, Venmo deposits, cash deposits, mobile deposits, not including transfers, because transfers are not deposits. You can't transfer from one account to the next and call it a deposit. They take those out. They're not considered deposits.
Okay.
So that loan specifically, the woman wanted to build an EDU in the back so she can get rent. The project was about $300,000. She got the whole $300,000. She's on her way of building up an EDU. And I believe she's going to rent it out for like $2,800 a month, which is going to help her with her mortgage. Because that's what a lot of people are doing right now. They're building EDUs so they can rent, because rent here in LA is very expensive, and they can easily get between $2,800 to $3,000 a month on an EDU.
And the rate for this loan is a fix or it's adjustable?
No, it's fixed, and she got a rate of 8.125 on a 30-year fixed rate, no prepay, because she lives in the house. It's a no prepay.
Okay, but they have an option to choose for adjustable rate?
They can do a HELOC. If they choose to do a HELOC, it's an adjustable rate, but mostly people are doing fixed because they don't know what's going to happen with the market, with the way the market's going, if the rate's going to go up or down, so they're not taking a chance. They'd rather take a fixed rate option than adjustable. It's almost the same rate anyway.
And what do you think about the market? You think the rates go down?
Well, it did go down from the last few months. I mean, I would say about a point, 1% less. So they are going down, but who knows what's going to happen after the election? Whoever gets elected, that's going to determine what's going to happen to us in the mortgage industry world. But Zoe, I have a question for you. Well, how do you see what's going on in the market? Like, what kind of loans are you seeing now?
What I see now, people still purchase. So I see a lot of purchasing.
Okay. Even at this high market?
Yes.
Okay.
Yes, because people believe that they can buy the house right now, and in the future they always can refinance.
Correct.
So there is always a solution to get out from the loan.
Of course.
And a lot of construction coming back. I feel that the developer coming back and looking for a new project.
Okay.
And a lot of second, as you mentioned,
Yeah.
because in the existing time, people don't want to touch the existing mortgage. It's pretty low. And that's why we have a lot of program for second. So not only tax return, we can use the bank statement, but those the most...
That's what I've been seeing also. A lot of seconds, purchases, very limited refinances, again, because of the rates. But I think once the rates go down, I think we'll see a lot of people will be refinancing their seconds.
We're waiting
with their
for the
first.
time.
Yes, yes.
And if you guys have questions to us or you wanna give us a scenario to review, you're more than welcome to call us,
Yes.
to send an email. And thank you for watching us.